Okay, so name of my presentation is Markets on Edge as Trump Disrupts. This is basically just a 10-minute analysis of the Wall Street Journal article that I'm doing research on. So for the introduction, we're just going to be taking a look of the purpose of today's presentation. We're just going to be taking a look at the early impact of President Trump's second term on the market and on the overall business sentiment. It's not really just all about numbers. It's really just about the mood and in the market and basically like how leaders and businesses are going to be reacting to it. We're also going to be diving into the connection between politics and the market volatility and corporate strategy as well. So when the policy moves like really fast and unpredictably, like it has been for the past few months, it creates a lot of challenges and opportunities for different types of corporate strategies to kind of take place. So we're not only just watching what Trump is doing, we're actually like watching what businesses are going to be doing as well to kind of adapt to how Trump is moving. So for the context, Trump's return to presidency has been pretty provocative, pretty polarizing, if I do say so myself. I mean, everyone already knew it was going to be that way, though. There's a lot of support, but there's also a lot of opposition, a lot of intense opposition. And I would say you combine all of that with how abruptly he's like putting out these policies, and when it comes to like trading and like tariffs and stuff like that, then you'll get a market that's pretty volatile for the most part, I'd like to say. Okay, so now we're just gonna go into like kind of just summarizing the article for the most part. First, we're seeing significant cuts to like a lot of federal programs, and a lot of people are worried about that because people see these programs as like essential, like vital, and a lot of Americans actually do use them. And then there's also he's going to be targeting DI initiatives. DEI stands for diversity, equity, and inclusion initiatives. That's what they're talking about, which a lot of organizations have spent a lot of money and a lot of time kind of trying to like build on and plan around as well. He's also going to be imposing tariffs on China, Mexico, and Canada with a lot of they're really aggressive as well. So I've been reading. And domestically, for us, for the U.S., he's going to be pushing back on wind power and on a lot of the foreign aid that we're giving a lot of these countries. So that's going to be a pretty huge shift when it comes to like policy, like the energy policy here in the U.S. and how it affects a lot of people around the world, a lot of nations around the world as well. Just a continued summary. So the S&P 500 is already up 1.4% in the first 18 days, and that's actually above the average for new presidential candidates. We're also seeing a spike in 52-week highs among the major companies like Netflix, JP Morgan, Chase, Walmart. I would say this suggests that a lot of investors and a lot of people that are like investing in the market and investing in these different like Fortune 500 companies, I say that their confidence is pretty high. And I would probably say that the confidence is pretty high because of the concept of the Trump put, which is basically the markets expect Trump to retract damaging policies if the stocks fall. So if like basically when he did instill all of these tariffs, you saw the market dip, you saw the market crash, and then immediately after the market crash, he decided to kind of hold off a little bit on the tariffs, or maybe he decided to start like negotiating on whether how bad the tariffs may be for different countries, and then after that, the market's almost immediately raised. On the last part of the article summary, there are going to be a lot of risks that we are seeing. There's a chance of like policy overreach, where changes kind of happen a little too fast, or the changes are a little too drastic. are too demanding, which often leads to pushback from people not really wanting to coincide with it, which is understandable as well. And we're also seeing a lot of concerns about like pressure on the rule of law. Like when normal checks and balances are like being challenged, Trump he kind of oversteps them. I understand like he's the president, but at the same time we do need checks and balances just to kind of keep everything as fair and as equal as we can, just based upon like the Constitution. And then also, I'll probably say that the fast changes and a lot of these really abrupt like policy changes and tariffs and stuff like that, it comes at a price, and it's most likely going to be damaging to a lot of businesses here in America that aren't prepared for it and that aren't, I guess, just like ready for it for the most part. On the other hand, we could take a look at like the market signals. Basically, VIX is suggesting low volatility. It's basically just tracking the market fear. So basically, what that means is just that a lot of investors are getting uneasy and they're getting nervous about what's going to happen next or what may be the next move from Trump. And from the business leaders, I guess most of the CEOs are quiet, or they're like cautiously supportive. Like they don't want to, because they're not really sure what's going to happen. So if they're really unsure about what's going to happen, then they can't really put all of their eggs in one basket, so to speak. They can't really be so far right or so far left. They kind of have to be neutral and just kind of wait until they see what plays out with the rest of Trump's term, basically. Okay, so this is how I'm going to be applying it to the course and our concepts that we are learning. I would probably say we could bring out risk management. We could talk about this with Trump's second term. He's been doing a lot of policy shifts and a lot of strong. I'll probably say he has a lot of strong, like the way he kind of says things, like strong like rhetoric, and that kind of comes with a lot of political risk, and it also comes with a lot of like risk for the businesses here in America, because they're not really sure about where things are going to turn or how it's going to go out, basically. One thing we can watch though is the trade policies. The tariffs are definitely going to be ramping up pretty quick, especially targeting China and Mexico and Canada, like I said earlier in the presentation. I would say that companies definitely need to model out like their business plan and definitely come up with a plan A, B, and C, because you just really don't know what's going to happen. I mean, all these changes could affect businesses at every level. They can affect how you price your like product, how the supply chains like operate around the world, and I just really feel like overall market is going to be affected pretty drastically. Okay, so let's start with the environmental scanning. The PESTEL framework is just looking at the political, economical, social, technological, environmental, and legal factors that are really relevant right now and have always been relevant. So we're at a pretty crazy time, like in history, where a lot of things are shifting really fast and a lot of things are moving really fast, like policy and everything when it comes to like politics and the legal aspects as well. So I really just say that companies and businesses, like I've been saying this whole time, they just need to look into the future and plan ahead and be proactive to how things are going to react, because I mean, it's going to happen really quick, really abruptly. And then on the other hand, there's also corporate social responsibility under political pressure. Under a lot of political pressure, I feel like there's more of a need for CSR, because there's companies being pushed from all sides. Like, they're being pressured by the customers, they're being pressured by Trump, they're being pressured by the economy, and they just have to understand that they still have a responsibility to the people and their customers. Um, yeah, they need to, yeah, basically just be fair and still like follow normal like business ethics. Just because like policy and the market right now is really, I guess, kind of like all over the place, that doesn't mean they shouldn't be following like the rules and the ethics of law and stuff like that. But the importance, the strategic implications, the importance of adaptability, um, just like I said before, in like high stakes environments, and like since the economy is taking a hit pretty hard right now, the importance of the adaptability is going to be vital when it comes to a business's ability to succeed and to be profitable in the long run. And then lastly, balancing ethics and profit amid policy shifts. There are going to be a lot of policies that come into the play in these next few years, but there needs to be a balance between the ethics and how much money you're making, because a lot of the policies, a lot of the policy changes may like, it may tempt businesses and companies to kind of like take shortcuts or do something a certain type of way to kind of benefit themselves at the expense of others, of other like people and like customers. But the long term risk is going to be is going to be pretty detrimental if you're taking shortcuts, just trying to, I guess, ease along. Okay, so in conclusion, um, the main takeaway from from Trump's disruptive actions have immediate and mixed effects on the market. Oh my bad. Trump's disruptive actions have immediate and mixed effects on the market. The investors are cautiously optimistic due to the perceived Trump put, and businesses need agile strategies and contingency plans, just kind of like I've been saying. And the final thought would be, politics and policies are now core components of market behavior and of corporate strategy. You'll definitely, if you're going to be a CEO nowadays, especially with Trump being in the office, you're going to have to stay on your toes. You're going to have to be proactive, and you're going to have to look to the future. You can't really overcompensate for what he's doing right now. You can't really put all your eggs in one basket because of how volatile the market is right now. It's going up and down, up and down, up and down. So that is my presentation. Here are my references. And if you have any questions, please do let me know. Thank you for your time.